One of the most pointed moments where I really saw a contradiction here was that he said something like the Fed's job is to set interest rates. So I said, wait a second, hold on. So you believe in price controls? And he said, no, of course I don't believe in price controls. But I said, isn't the interest rate a price? And you want the Fed to control it. So that's price control. He's like, no, that's not what I'm saying. Well, don't price controls control the price, control the prices of goods in the economy? He's like, yeah, well, so everything in the economy is affected by interest rates. Yeah. So you believe in price controls of everything? No. So he couldn't. It's not like he objected to that and proved that I was wrong. It was like putting a contradiction algorithm into a computer, and it just kind of glosses over it and keeps going. Even many gold bugs and silver stackers do not really understand the point that gold is money. We're not making a historical point that in the past it was money and now we have the dollar. I'm saying right now, all the time, when you use a dollar, you're using the gold value of a dollar. The gold is the money itself. But if you look at the S&P versus gold since 1971, gold is outperforming. So you could have just done nothing and just held money and you would have made more money. The monetary system is still based on gold, because once the gold exchange rate with the dollar or any other currency goes to infinity, that is the definition of hyperinflation.
Rafi Farber shared an intriguing perspective, suggesting that some people simply can't wrap their heads around the reality because it would force them to admit they've been on the wrong path, a realization that could lead to disaster. He emphasized that many gold and silver enthusiasts don't fully grasp that these metals are still the foundation of money. According to him, gold essentially defines what a dollar is. Acting as its inflated stand-in, he sees the current situation as a massive opportunity, where we're buying gold at a discount, anticipating the collapse of the current monetary system. Farber considers silver the top substitute for gold, especially in a gold standard scenario. He passionately argued that gold and silver are not just historical relics, but the bedrock of all monetary systems. There's no escaping this reality. We can't just decide to base our system on something else. It's as if the very fabric of economic history demands continuity with gold. Farber believes that abandoning this chain would require a complete reset of civilization, which he equates to an Armageddon scenario, an impossibility in his eyes. While he acknowledges that we're on the brink of the most significant economic upheaval in human history, he doesn't see it as the end of the world. Instead, he anticipates the collapse of the current system and a chaotic but organic emergence of a new one, driven by honest value, rather than any centrally planned intervention. It's not just an end, it's a rebirth, albeit through the flames of disruption.
It's not going to be a central plan. It's going to be the breakup of the economy, like the breakup of the Roman Empire, and then you're going to have pockets of people exchanging things for gold and silver because it's honest, or an honest substitute for it, and then gradually, after the big explosion, breakup, collapse of the Roman Empire, American Empire, same thing, then you're going to have a rebuilding of pockets, and gradually they're going to connect again. It's going to take a while. That's what's going to happen. In terms of what's going to be planned or what should be planned as the new monetary system, how about honesty? Okay, gold and silver are money. Use that. When you substitute it, don't inflate it, and that's going to be the new monetary system, just like it is after every collapse of every empire. That's what always happens. It's what's going to happen now. Technology does not change the nature of who we are, and we're going to see it again. Okay, so the second part, how do I see it unfolding exactly? I can't see it how it unfolds exactly in terms of the consequences of it. I don't know how many people will get rich. I don't know exactly what the political landscape is going to look like. I don't know. It's just going to be a lot less centralized. It's going to be a lot more regional, local, that kind of thing. I know people want a more meaty answer than that. So I guess I could say, look, the dollar is eventually going to die in the streets of the U.S. I've said this before. The dollar is by definition the other side of the assets on the Fed's balance sheet. Most of those assets are either treasuries or mortgage-backed securities. I don't see treasuries defaulting outright because they'll always raise the debt ceiling to enable more paying back of those things. But mortgage-backed securities could default because people could theoretically stop paying their mortgages. And when those start to default, what you have is a massive deflation, because if one side of the dollar defaults on balance sheet, then those dollars go out of existence on the other side because it balances out. And then you have a massive deflation. And then what happens is the Fed is going to have to print to replace those dead dollars. And that's when you'll start to see the supermarkets raise prices on bread on the front end, right? It's connected in a very long chain which the end of the chain at the supermarkets cannot see what's happening at the Fed's balance sheet. It's not like a supermarket, director is going to look at the Fed's balance sheet and say, oh, well, mortgage-backed securities defaulted today. I guess we have to raise the price of bread by 50%. That's not what happens. It's a chain that filters through the system, and no one part is conscious of another part directly. It's just all connected. This is not the only way it could happen. You start seeing defaults on mortgages and falling housing prices, and then banking trouble from a bank that owns all these mortgages, and then a bailout in the Fed's balance sheet, and it goes up like $5 trillion in a day, and then the dollar starts to collapse in the streets. Maybe that's one way it could happen. It could happen 1,000 other ways. I don't know.
Rafi Farber speculated that groups like BRICS or other regional powers might attempt to trade in gold. If they genuinely backed their currency with gold in an honest way, though he doubts they will, it could potentially undermine the dollar. However, the only real advantage they'd gain would be enriching their countries in a true capitalist sense, with freedom at the forefront. Farber is skeptical, believing that BRICS won't establish an honest system, and may instead try to manipulate the system, ultimately to no avail. He foresees the collapse of the current international trade system, which would then rebuild organically from the ground up, much like the natural progression seen at the end of centralized monetary planning. Farber explained that the gold standard wasn't established by international decrees, but emerged as nations independently adopted gold because it worked. He believes that any attempt at a pre-planned system is doomed to fail. Farber also touched on the potential for a physical metal shortage, particularly in COMEX. He recalled a similar situation in 2015-2016 when silver prices were low, and despite expectations of a drain, the supply rebounded, possibly due to low demand at the time. Now, with registered silver levels dropping, he speculates that people might be hoarding physical silver in anticipation of a monetary collapse. If this is true, a shortage could spell trouble for COMEX, especially if too many redemption requests come in and there's not enough metal to go around. While Farber isn't certain when or how this will happen, he is confident it will eventually occur. For him, the dwindling supply is a telling sign, as basic economics suggests that low supply typically leads to higher prices.